Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China MINSHENG Banking Corp. Limited quarterly report. China MINSHENG Banking Corp. Limited offers a wide range of banking products and services to its customers. The company operates through three main segments: corporate banking, retail banking, and others. In terms of deposit products, the bank provides various options such as saving accounts, deposit books and certificates, contracted and agreement deposits, call deposits, and corporate term and current deposits. It also offers a range of loan services including personal housing mortgage, individual automobile purchase, household composite loans, corporate loans, medium and long-term working capital loans, and short-term working capital loans. In addition to these products, the bank provides various value-added services such as debit and credit cards, appointed and domestic remittance, payment and collection agent, clearing, safe deposit box, VIP card services, salary and welfare agent card services, internet banking, mobile banking, telephone banking, and self-serve banking. The company also offers specialized services like gross settlement, wages distribution agency, and letter of guarantee, cash management, trade finance, industrial chain finance, international credit, and comprehensive credit granting and financial product investment. The bank operates through various channels including branch-level institutions, business outlets, general sub-branches, community sub-branches, and small business sub-branches. Its customer base includes individuals, corporate customers, government agencies, financial institutions, micro, small, and medium-sized enterprises. With its extensive range of products and services, China MINSHENG Banking Corp. Limited is well-positioned to meet the diverse needs of its customers in the People's Republic of China. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. Revenue growth and decline. Key drivers. The primary drivers of revenue growth are two key factors that have significantly contributed to an increase in revenue. Firstly, cross-border RMB settlements have seen a substantial surge of 276.75%, indicating a significant expansion in international trade and financial transactions. This trend is likely driven by China's growing economic influence and the increasing demand for renminbi-denominated assets. Another major driver of revenue growth is intermediary income from wealth management, which has experienced a notable increase of 50.27%. This suggests that individuals and institutions are increasingly seeking investment opportunities and financial services, leading to higher fees and commissions for intermediaries. These two factors have been instrumental in driving revenue growth, highlighting the importance of international trade and financial services in the current economic landscape. While there is no explicit mention of a primary driver of revenue decline, it is essential to consider potential challenges and risks that may impact future revenue growth. By understanding these drivers, businesses can make informed decisions to capitalize on opportunities and mitigate potential threats to their revenue streams. The net income of the company underwent a significant fluctuation in the given period. Initially, it experienced a decline of 9.64%, which is even more pronounced when excluding extraordinary items at -10.89%. However, this trend was reversed with an increase of RMB 9 million or 2.74% towards the end. The profit margins also witnessed some changes during this time. While the net interest margin saw a slight improvement of 0.02%, the operating profit margin took a hit, decreasing from 36.4% to 34.1%. This indicates that despite some positive developments in certain areas, the overall profitability of the company was impacted by other factors. Despite initial indications of negative operating cash flow on subsequent pages, a closer examination of the financial data reveals a more optimistic picture. The most consistent and clear information is found on page 29, which reports net cash flow from operating activities for both the group and the bank. According to this page, the company has generated significant positive operating cash flows, with the group producing £1,434,111 and the bank generating £1,362,511. This suggests that the company is indeed generating positive operating cash flow, contradicting earlier indications of negative cash flow. The company's debt level has experienced a notable increase. Financial liabilities at fair value through profit or loss rose by 39.4%, while borrowings from the central bank increased by 32.3%. These significant increases suggest that the company is taking on more debt. However, despite the rise in debt levels, interest expenses have actually decreased. In 2026, interest expenses were $26,752, down from $33,313 in 2025. Additionally, cash payments for interests, fees, and commissions also declined, from $33,717 in 2025 to $30,597 in 2026. This indicates that the company is managing its debt effectively, at least in terms of interest expenses. The company's financial performance is a crucial aspect of its overall health and stability. One key indicator of this is the payment of dividends by the company. According to the provided information, the company has indeed paid dividends, indicating that it has generated sufficient profits to distribute some of them back to its shareholders. This decision to pay dividends suggests that the company's management believes in rewarding its investors for their loyalty and support. It also implies that the company is confident in its future prospects and is willing to share its success with its stakeholders. There is no concern regarding inventory buildup or supply chain disruption, as the current situation indicates a stable and well-managed system. The absence of any issues related to excess stockpiling or disruptions in the supply chain suggests that the logistics and distribution processes are functioning smoothly. This stability is reflected in the reports on pages 15 and 18, which confirm that there are no significant concerns in these areas. That concludes the financial summary for China Minsheng Banking Corp. Limited. Feel free to comment below, and I will be happy to answer them when possible.